How to get rich during a recession. Once in a lifetime opportunity. During a recession, many people wonder how to build wealth. While building wealth during tough economic times is not impossible, it does require a strategic approach and a willingness to take calculated risks. People often view a recession as an intricate thing because they fear losing their sources of income. If you have liquid funds or savings, you can invest them. It is important to take measures to protect yourself against such economic conditions if you do not have enough savings. Experts debate whether the U.S. has entered a recession as inflation rises. The stock market falls and the gross domestic product (GDP) falls. The jury is still out on that question. But here's how to get rich during a recession. Invest in discounted stocks. Stock prices fall during a recession. Investing in highly discounted stocks gives you the opportunity to get great stocks at a discount. When the stock prices rise, you can sell or keep your stocks. If you learn how to lend and borrow money in the stock market, it will help you in a recession. During a recession, bargain hunters might be able to take advantage of a stock market downturn and buy low and sell high. Stocks have already fallen by a lot, in spite of the GDP contraction in Q1 and Q2. In the first half of 2022, the S&P 500 lost about 20%, its worst performance since 1970. In a recession, investors may want to focus on companies that can thrive instead of grabbing shares on the cheap. During the Great Recession of 2008, Warren Buffett invested heavily in Kraft Foods and NRG Energy. During the 13 recessions since 1945, the S&P 500 gained an average of 3.7%. A fraction of shares can even be purchased with as little as $1. Some investing apps even allow you to purchase fractions with as much money as you like. Since a beginner may not be able to afford stocks, real estate, there are several platforms that allow individuals to pool funds to purchase real estate in exchange for fractional ownership. In an app that has been called Tinder for real estate, PairGap allows individuals to form an LLC, partner up, and purchase property together. One option you can explore if you're more tech-savvy is tokenized real estate. Essentially, tokenization is the process of reassembling assets digitally, most commonly on blockchain networks. Tokenization makes pooling funds, acquiring assets, and transferring assets much easier. One example of a tokenization platform is Tokeny. In the future, you may be able to sell your assets at a higher price if you wait to sell them from the economy rebounds from a recession. Consider buying real estate. When the economy is in a slump, real estate can be a lucrative investment. Interest rates could stall the upward momentum in the real estate market during a recession without necessarily affecting property prices. As the Fed raises interest rates aggressively to tame rising inflation, this is bad news for real estate. Borrowers often think twice about getting a loan when borrowing costs are high. It was Sam Zell, also known as the Grave Dancer, who made his fortune buying properties when no one else wanted them. Zell acquired a portfolio of high-quality properties at a significant discount during a recession in 1973, when many loans went into default. It may be a good time to enter the investment property market if you've been eyeing investment properties in recent years. Real estate is becoming easier to enter in these days, no matter your budget or lack thereof. Maintain a secure source of income. The savings you earn will be used to find new jobs if you lose your source of income. As a result, you may secure a job first, and if you run a business, you must ensure its growth in the future. You also need to be careful about your role and the employer's financial stability. You can switch your profile also by enrolling in an industry that has more scope if you find any doubts. If you find any doubts, change your employer and start looking for a new job in the same field. At the same time, you can also create side income sources by starting a side gig or other side business. And as what I've said, starting your own business. Despite the fact that not everyone wants to start their own business, 47% of millionaires are entrepreneurs, reports The Economist. The idea of starting a business during a recession when other companies might be closing can seem daunting. However, going against the tide can have its benefits. It is easier to establish a position in a market where there is less competition. If you're not quite ready to quit your job and start a business just yet, you could start a side hustle first. You should do your own research and evaluate your financial situation before investing in stocks, real estate, or starting your own business. Invest in defensive stocks. The consumer discretionary sector is known as cyclical stocks since its gains and losses are influenced by economic cycles and consumer confidence. During a recession, defensive stocks can help protect your portfolio. These names belong to a non-cyclical sector like utility stocks and consumer staples. People still need to eat and use toilet paper regardless of how poorly the economy is doing. So consumer staples such as food, beverages, and household products are recession-proof. During a recession, utilities also outperform other stock sectors because demand for utility keep up. Maximize the benefits of taxation. Stocks and real estate have been used to build wealth for ages because of their tax advantages. As an example, some retirement accounts offer tax benefits such as 401ks, 403bs, and 457s. These accounts deduct your contribution from your income when determining how much you should pay in taxes. Other accounts, such as Roth IRAs and Roth 401ks, allow you to grow your investments tax-free until retirement. As a wealth builder, it's crucial that you leverage these benefits, such as tax deductions for owning real estate property and the possibility of deferring tax payments on real estate profits through 1031 exchanges. You can reduce your overall tax liability and accumulate more wealth by investing in tax-advantaged accounts and taking advantage of tax deductions. Invest progressively and consistently in the future, and you may come out the other side in much better financial shape than you did before. Look closely at your money, increase your income, and build up your cash reserves. Debt refinancing. You should consider refinancing your high-interest debt to a lower interest rate during a recession. If you have high-interest debt such as credit card debt or student loans, taking out a new loan to pay off an existing one, such as a mortgage, is a refinance. A refinance replaces an existing debt with a new debt that has better terms or conditions. As a result, you can get a lower interest rate or lock in a lower monthly payment, which will save you money on interest and help you pay off your debt quicker. Invest in precious metals. The price of precious metals, including gold and silver, tends to rise during recessions because the demand of these commodities rises. As an investor, you have a few options for investing in precious metals. One of the easiest ways is to purchase coins and bars from a seller or a dealer. Although this is different than buying a security, it's still a good option. Investing in ETFs is a great way to buy precious metal securities if you're more interested in a single industry. In this case, the precious metal market. If you're saving specifically for retirement, you can also invest in gold IRAs. Dividends are worth buying. In a recessionary period, the best stocks to own are those that are well established with large capitalizations and strong cash flows. In addition to providing better weathering economic downturns and smaller companies with poor cash flows, these companies also tend to pay dividends more frequently. Investing in dividends serves many purposes for investors. First, it's a sign that a company is financially sound and is capable of surviving most economic conditions. Second, dividends provide a return cushion. The reason dividend stocks outperform non-dividend stocks during market downturns is because you will receive a return on your investment even if your share price decline. A mutual fund or exchange-traded fund ETF that invests solely in dividend-paying companies is the best way to own dividend stocks. It tends to generate high current yields and capital appreciation when the stock returns would invest in companies who have a long history of paying dividends and that have a strong track record of increasing those dividends. Because these types of funds invest in companies that provide stable returns across multiple market cycles, they may not perform as well during market rebounds because they invest only in dividend-paying companies. Therefore, as the market rebounds, you can gradually allocate away from your dividend funds, but you should always retain a portion as a defensive measure. What do you think? Let us know in the comments below. Thank you for watching and see you in the next video.